Hello and welcome to Chapter 3 for Government and Nonprofit Accounting. In Chapters 1 and 2, we talked a lot about different vocabulary surrounding government accounting, some rules and procedures, rule setting boards, etc. Now we're going to get into actual accounting, recording entries, creating financial statements for government entities. So in Chapter 3, we talk about classification of government accounts and then recording of government accounts and two of the main financial statements. So which is the government-wide statement of activities, and then the other one is called the statement of revenues, expenditures, and changes in fund balances. I just wanted to make sure I had that name specifically correct. Of course, our format for reporting is expenses minus program reviews equals net expense or revenue. Because governments are not for-profit entities and they are just looking to offer services to citizens, we don't really have the net income part, so we either have more revenues than expenses or more expenses than revenues. Expenses get reported by function or program. So functions and programs can be used simultaneously, but really functions are group-related activities looking such as public safety is a good example of function, and programs are group activities, operations, or organizational units, such as highway beautification. So we can have we can have like a public works department, and public works is focused on, so that would be a function where public works is focused on roads, infrastructure, and then a program within the function of public works would be highway beautification. So this would be something specific we have money set aside for. We have direct expenses and indirect expenses. So direct expenses are reported under each individual specific function, where indirect expenses are reported under the general government's operating activities. So what the book gives an example of as an indirect expense is interest expense. So if we have buildings that are owned by the government that we might have mortgages on, then we would have interest expense that we paid on those. And because that's not tailored to any specific function or program, but just a general government expense, it becomes an indirect expense. We have program revenues and general revenues. The program revenues are specific to the function or the program. So special taxes, special collections, bonds are ways that we can generate revenue for a special activity within the government, where general revenues are reported in a separate section. General revenues could be taxes collected that are general use for the government and not taxes that have a special rule. For example, gas taxes are one of those things. So gas taxes can only be used for highway and road repair, bridge repair, etc. So that would be a special program revenue in that it can only be used, where property taxes, sales taxes can be general revenues of the overall government. Okay, so we separate them Program reviews are reported separately from general reviews. Usually, instead of having different financial statements, they each get a column within the financial statement. Separate reporting allows us to look at whether these functions or programs are self-sufficient, whether they're being supported by general revenue of the general purpose government, whether they're using grants, bonds, etc., temporary funding to cover their functions. Okay. Different ways that we can generate program revenue. So we can charge for services. We can charge fines for people parking on streets, for example, and those fines help pay for operations. We can fine if the library is a function of the government, we can fine for late books, example. Business type activities, if the government supplies water, garbage service, they can charge for those different kinds of things. They can also require licenses and permits. So licenses and permits for food trucks, pets, any number of things. Okay, then we have operating grants and contributions. So these would be grants and contributions restricted for operating purposes. We can apply to, say, the federal government would have a special grant, or for a while the state of Iowa was offering grants for Main Street beautification and restoring the main streets of cities within Iowa. So that would be a specific grant that we could apply to once we used all of the grant funds available and it had a very specific purpose. We can also get revenues that are donated by people. So people might donate money and say, I would like this park to always be maintained. And that's what I'm donating funds for. And then capital grants and contributions are very similar to operating grants and contributions in how they work, but they're restricted to capital acquisitions. Okay. So how we report different items. So when we're looking at this general revenues in the statement of activity, we have special items. So special items are those items that are within management's control. They can be normal items, or they can be unusual in nature or infrequent in occurrence. But what determines whether they're just special items or extraordinary items is whether or not they're considered within the management's control. We also have transfers between governmental activities and business type activities. So for example, the electric company could transfer money to, or the electric function could transfer money to the garbage function. The general government could transfer money to the public safety function. So those are usually just net transfers. So we transfer from one entity to another, and it shows as a zero change in the overall governmental's reporting activities. And as we're going to repair these statements, we're going to be looking at these different things. Okay, so we have our primary governmental fund called the general fund. And the general fund is for all financial resources and expenses for the core government services. And then we also have special funds, our program funds, our function funds. Okay. Special revenue funds are created when a revenue source is restricted by an outside donor or grantor, or a tax or other revenue source. So example, that gas tax that I was talking about, that's a special revenue source where that tax is authorized by a legislative body, the federal government, for a specified purpose. Other examples or special revenue funds are, if you've ever heard discussion of a city vote for, say, library funding. So there are two different ways that governments can collect money. So they can do bonds, other than donations and just taxes and stuff like that. So they can do like a bond release. So say if we wanted to build a new high school, we could sell bonds. So the city of Waverly could sell bonds and say that the money generated from those bonds is going to be used to build a new high school. Of course, this creates debt for the government. The other way to do it is to do a special property tax. So this is a special revenue fund where we say anyone who agrees that we need to build a high school should vote for this special thing. For 10 years, we're going to add a special property tax on that you're going to pay, and that special property tax, which is going to be added onto your regular property tax, is going to fund the building of a new high school. So that's an example of a special revenue fund that is authorized by a legislative body for a specified purpose. As far as restricted by an outside donor or grantor, so like we already talked about grants that have very specific purposes, so they're restricted and can only be spent on that amount. Donors who donate money to nonprofits, to governments, can also restrict how those funds are used. So they can donate and say, please use this donation for general purpose, or you can donate and say, I'm donating and these funds can only be used like to maintain parks or for the library or some kind of special funding. Okay, so we have the general fund. And then we have all of these different funds that are, of course, part of our government service. So we have the permanent funds, our capital project funds, debt service funds. So if we have a bond issue, and then we have debt service where we have to have provisions in place to pay back those bonds. And then special revenue funds for all of those special taxes and donations and grants. Okay, and these are all different type of government funds. Our balance sheet accounts. So the balance sheet looks a little bit different for a government entity than it does for business. Notably because we don't really have equity. So there's no owner equity, there's no stocks, there's no retained earnings. It's really just current assets and then current liabilities. So current and long-term, which is those deferred outflows of resources, and then current liabilities and deferred inflows of resources, or things that we know is going to happen eventually, but isn't slated to happen for 2 years or 5 years or different kinds of stuff. So we have our revenues, increases in financial resources other than from financing sources such as interfund transfers and debt issue proceeds. So those get different treatment. And we said we're going to create the two main statements as part of the examples videos, and then we're going to see firsthand, you're also going to do that for your city of Smithville, and we're going to see firsthand what that looks like. Other financing sources, so these are transfers, interfund transfers, debt issues, sales of general government issues, expenditures. This is our cost of goods or services or our outflow of financial resources. So for government accounting, we use the term expenditure rather than expense in the accounts and the financial statements. And then other financing uses would be those transfers of finances from one fund to another.